Welcome back, viewers. Today we will be looking at another simple trading strategy. But before we do, if you have not watched the first video on the channel and all the videos after that, you need to go do that now. Here at the Academy of Forex, we are building the best trading system possible as a team. And as a team, we will all profit from it when we are done. You can find a link to the first video down below in the description, and you should also see it pop up in the top corner right now. There is also a link down below to sign up for TradingView. You can save a little bit of money if you use the link below to sign up for your account. You can also find a link below to join us on Discord. Discord is a free group communication platform where we are having great discussions about all things to do with trading. Lastly, I get people who ask me if I can send them a list of all the winning indicators that we have discovered. If you are interested in receiving a list of all the indicators that we have tested, including the ones that we have discovered, but you are not interested in going back and watching all the videos from the beginning and all the way through to date, then what you can do is you can sign up for our Patreon. If you sign up for the $9 a month Patreon, then I will send you a list of all the indicators that we have tested to date. I also send out a updated list every week of all the indicators that we have tested up to that point. And if you are just interested in supporting the channel, there is a lower tier Patreon at about $3 a month that you can sign up for as well. So look for the Patreon link down below in the description to sign up for either of those. Alright, as I said, today we will be looking at another simple trading strategy. So, what we have on screen here, let's start with the top. So on top here, what we have is the Keltner channel. And so if you go into TradingView's indicators and you go to built in and you scroll down here, the Keltner channels is right here. You can see it here on screen. Surprisingly, I don't think we have tested this indicator yet. And so for those of you who don't know, typically we are testing indicators here on this channel. To date, we have tested 212 indicators, and we have found 81 winners, and the best ones so far were able to achieve a 100% win rate. If you're interested in knowing more about those, then go back and start watching the videos from the beginning of the channel on through, and that will outline which ones were the winners, which ones had the best win rates, and so on. And so at some point, I think I might go ahead and put the Keltner channel to a test. I'm not sure why I never tested it. I think that maybe because we have tested quite a few band indicators. But yeah, I don't really know. There's no real exact reason why I've never tested the Keltner channels yet. But that is now on the to-do list. This is something that I've played around with, before. And so, yeah, Keltner channel here on screen. And so typically the Keltner channel is used, you could think of it as, for those of you out there who are kind of the dedicated followers to the channel, or the ones that are coming in from areas like no nonsense Forex and stuff like that, who understand what the baseline is. So you could think of it like a baseline, but with a little bit of buffer in between the baseline, you know, buy signals and sell signals. And so one of the biggest issues I have with a baseline is that typically you end up getting whipsawed. Even if you have a few good other confirmation indicators, then it can kind of resolve the issue of getting whipsawed in and out of long and short positions. But it's kind of inevitable that it's going to happen, even with some of the good confirmation indicators in place. And so that's one thing that I've never liked about using a baseline, and I've mentioned it in a few other videos before. And so you can think of a Keltner channel basically as a moving average that has a deviance from top to bottom, giving it just a little bit of buffer, a little bit of wiggle room there, so that way you're not entering a short trade just to immediately get a reversal and a buy signal, to then just immediately get a reversal and a sell signal, and getting pinballed back and forth in and out of the positions. And so other than that, the Keltner channel basically is very similar to what we would consider a baseline. And so what we are looking for is we are looking for price action to break either the upper channel, the upper line, or the lower line. And when it does that, that would be either a buy signal or a sell signal. And so that's kind of the beginning basis of what direction we are going to take a trade in this particular strategy. Now, the next step of the process is to be able to identify when we have momentum in the market. So with any good system, any good trading algorithm or trading system, what you want is you want to be able to really jump in trades when momentum is in your favor, whether that momentum be in the form of volume or what have you. There's many different ways to kind of identify momentum coming in the market. And so sometimes the volatility or the volume of a particular pair or a stock doesn't necessarily have to be identified by volume alone. So a lot of people think that you absolutely have to have a volume indicator in your trading system. But you don't necessarily need a volume indicator. You just need something that can gauge the momentum in the market. And volume happens to do that rather well, which is why a lot of people kind of reference that. But in this particular case, what we are going to do is we're going to use kind of something a little out of the box. And so what we have here on the bottom of the screen is actually the Bollinger Band width indicator. And that is also in the built-in indicators on TradingView. You can see Bollinger Bands width right here. Now what I've done is I've made a few modifications to the Bollinger Band width. And so what I have done is I've changed it from a line indicator, which this is how it would normally look when you pull it up on screen, excluding the red line that is running down the middle here. You would basically just have an oscillating line that just kind of bounces between points here. And so you can see that it has kind of an infinite negative value and an infinite positive value, and it can go as high or as low as theoretically possible. And what I have done in this particular case is I have went in and I have changed it from a line to columns. And so it looks kind of similar to a histogram. And so there is a histogram form right here, which has little bitty skinny bars. And what I want is kind of bigger, thicker bars. And so columns is what it is classified as underneath the settings. And so once I do that, we kind of get a little bit better, a little bit clearer picture of what Bollinger Band width is. And so for those of you who don't know, the Bollinger Band width basically is, plotting on chart the expansion and contraction of Bollinger Bands. And in this particular case, if we were to take the Bollinger Band indicator and put it on screen, Bollinger Bands here, we will turn off the Keltner channels for now. Bollinger Band here, what this indicator is doing is it is reading the width between the upper and lower Bollinger Band, and it is plotting it again, giving it numeric value and plotting it down here on the bottom of the screen. Now, what does that matter? Well, part of the system behind Bollinger Band is that they expand and contract with volatility or volume in the market. And so as the two bands are narrowing in on themselves and contracting downward, like you can see right here in this area of the screen, that is a sign that momentum is weakening in the market and that we are losing momentum. And you can see that down here in this area, you can see that the columns are reading very low numerically on the chart plotted down below here. And then as the bands start to widen and contract or spread apart, then what we get is the columns start to rise. And these columns are indicating that we are seeing momentum coming into the market. And so what we are looking for is we are looking for the expansion of these bands. Again, that indicate that we are seeing a increase in volatility, an increase in momentum, an increase in volume, however you want to word it. But basically, we are seeing an opportunity to jump on board a train that is starting to take off and leave station. And so you can see again when the bands narrow in really tight here, you can see that the columns are really low down here. You can see that when the bands are really wide open, that the columns really raise up and start to create these mounds. So we'll go ahead and remove Bollinger Band off the screen because we're not going to actually use the Bollinger Bands. What we're going to use again is the Keltner channels. Now, what I have done is I have added in, and I've played around with a few different ways of doing this, but I thought about doing similar to how the default volume indicator works in TradingView, and I'm sure probably a few other platforms have kind of the same setup. So if we just go to your standard default volume, like so, we can actually take this and we can move it down to a new pane below. And what we can do in this particular case is we could add a moving average to the volume. This acts very similar to the Wada Atar explosion indicator, where you have volume bars and you have different kind of lines in the sand developed by moving averages or what have you, and the volume bars need to be above those areas for you to be able to consider volatility or volume increasing in the market. Now, I tried using moving averages and plotting all kinds of different ways to use the Bollinger Band width with other indicators, and all of them just really didn't work the way it needed to work. And so ultimately what was decided on was just a simple line in the sand, a simple line at a specific numeric value. And oddly enough, what makes this a little bit challenging is the fact that if I come in here and expand the Bollinger Band width, you can see that if I start to expand here on the Bollinger Band width, and what we're looking at is we're looking at the numeric values over here to the far edge of the indicator screen. When this indicator was created, it wasn't created where you have the numbers that break down into I guess decimals of themselves. What you have is that it just reads 0.02, 0.02, 0.02, 0.02 for an extended period of time, and then 0.03, 0.03, 0.03, 0.03. That can be a little problematic because we're trying to narrow in on kind of a rather specific area that has been tested and kind of optimized for performance. And so what you will have to do, and the Keltner channel is just your standard Keltner channel. I haven't changed anything on the Keltner channel at all. So there are the settings. The Bollinger Band width is on your standard 20 length settings as well. I haven't changed anything in that regard. But what I have done is, if you see here, I'm going to go ahead and drop a line on screen. And when you do that, you need to go in and change the horizontal line's coordinates. And what we are going to change it to is 0, 2, 7, 0. Okay? And so that will now, you see here that the blue line has now dropped right on top of the red line that was there. And so that is the particular coordinates of the line in the sand that we have drawn. So how are we going to trade this? Well, at this point, you probably have a pretty good idea of where this is heading, but if you don't, that's all right. No big deal. Let's explain it just a little bit. What we are looking for is we are looking for price action to break and close beyond either the upper band or the lower band of the Keltner channel. And when it does that, for it to be a valid entry, either short or long, the Bollinger Band width needs to be above our designated line, showing that we have momentum in the market to then take that trade. Now, if at the break, let's look at here on screen. So we are right here at this area. This is where you see the first break of the lower band of the Keltner channel. I'll move that line over so that way, well, we'll just erase that line. Right here on this candle right here, we have our first break of the Keltner channel on the lower side. But if we follow it down, you see that the Bollinger Band width columns, they're currently below our line, our designated line in the sand. And so in this particular case, we would not enter this trade for a short. What we would do though is if price action continues to trade below, and it doesn't have to continue to, but in this particular case it does. So 1, 2, and the third bar is still under the lower band of the Keltner channel, not the wick, but the body of the candle itself. And now you see here that the Bollinger Band width column has now increased above our designated line in the sand. In this particular case, we would then take a short position and we would ride this out for as long as we could. Now, in this case, and you can play around with the stop and the take profit however you see fit. What we are going to do is we are going to do a few tests. We're gonna play this forward a little bit here in just a second and look at some of the trades that we would take place. And what we are going to do is we are going to use our 80 pip take profit and our 120 pip stop. And what we are going to do is when 80 pips first take profit is reached, we would then break even at the rest of the trade. So this is how you would actually trade it if we were trading this in real life. What you would do is you would enter a trade, and for those of you who have been around for a while, I'm sure you know this all too well. Let's say that right here is when you entered the trade. In this particular case, the close of this big red candle, you would have entered the trade right here. You would have put your stop at 120 pips, which would be right in this particular area, right about here. And you would put your first take profit at, get over here so I can see, your first take profit at 80 pips, right about there. So you can see the green line, first take profit, the blue line is our entry, the red line is our stop. And what we would do is we would let this trade ride out, and you see that right down here on this big red candle, we broke our first take profit goal. And what we would do at that point is we would move the stop to break even right here where we entered into the trade. Now at this point we have banked and then we would close half of the position at our first take profit. So at this point we have banked 80 pips on half of our position. We have moved the stop to break even. So now this is a risk-free trade, and then we would ride this trade out for as long as it would continue to let us ride it out. In this particular case, you can see that on this big green candle right here, price action would have come back and stopped us out for the rest of our position right at break even, costing us nothing. We would have banked 80 pips and we would have moved on looking for the next entry into the trade, which would have taken place actually right here on this candle. So let's move this out of the way and let's move this to there. That candle right there, we would be at an entry right about there. We would again take profit at 80 pips right there and stop at 120 pips, which would be about right here. Now you see that again the price action came down on this weird looking wicked candle right here that has no body. It came down and touched our first take profit, we would have then moved the rest of the trade to break even right here, like so. And you see that again, we would have come up and gotten stopped out at break even. Okay, so now that everybody knows that that's how we would manage our positions, if that is how we were trading it, you can trade it in that way, or you can choose to trade it however you see fit. You could also take your stops if you were so inclined to do so. Let's say that you had an entry right here, as we said, and you could set your stop at the top of the Keltner channel right here. And so that would give you quite a bit of breathing room. Surely it would allow you to have a few more winning trades and not get stopped out quite as much. But you have to balance that with the fact that now you are taking a larger loss position. You could narrow in the stops closer. Again, this is absolutely up to you how you want to do it. But for the sake of testing, what we are going to do is we're going to assume that when we hit first take profit, that we would just take the entire trade off the table, and we would use the 120 pip as our hard stop, and that will be that. Let's go ahead and play this forward and see if we can't snag ourselves a few signals here and see what all in all we would get out of this. All right, so we get our first trade, first signal right here on this candle, and this wick right here would have gotten us to our first take profit, and so that would have been a winning trade right there. Now you have to be mindful when you're back testing of the small nuances of what your strategy is doing. Don't overlook little pieces that might be a little challenging to see. So this little bitty green candle right here, price action came down, closed inside the Keltner channels. This little green candle broke up above and closed above outside of the Keltner channel, and our Bollinger Band width was above our designated line in the sand. That would have been a valid entry right there. Unfortunately, on this big red bar right here, we would have gotten stopped out. Keep in mind that no strategy is perfect, and so you are definitely going to have some losing trades. Don't get discouraged by that. Take them for what they are and keep on moving forward. If you have tested your strategy thoroughly, then there should be no issue. With that being said, we are using this strategy right now on the USD versus the Canadian dollar, and so beyond this, any other pair, I'm not really sure how this strategy is going to react. I haven't tested it across all pairs, and so I encourage you to do that. I encourage you to test it across multiple time frames. I encourage you to play with the settings. I'm giving you kind of the building blocks of a very sturdy foundation to play with. So let's go ahead and move forward a little bit more. You see that right here we get another break above the upper band of the Keltner. We close outside of the Keltner channel. Now let's go ahead and play this forward. You see that that one takes off rather nicely. If we would have been using the first take profit and stop, we would have been stopped out right here for break even, but we could have picked up another valid entry, a continuation trade right here on this candle, which we will map out because in this particular case, if we would have taken the entire trade off table, we would have been stopped out of this position for 80 pip gain, and we would have re-entered right here on this candle as it broke back up above, and our Bollinger Band width was again above our designated line. Now notice how we are not getting pinballed in and out of trades because we are using the Keltner channel to give us some breathing room, and we are using our Bollinger Bands as a range filter and a volume or momentum indicator as well. One last thing about this trade back here, keep in mind that if you would have chosen to set your stop at the lower band of the Keltner channel, you would not have gotten stopped out of this trade. It would have actually came back and continued in your favor, and you would have taken a winning trade in this particular case, and you would have had all wins at this point. Let's go ahead and continue forth. There would be another valid entry into a long position right there. Play it forward some more, and you see that once again we get another winning trade. Now, what happens if you choose to what happens if you are in this trade and you take half the trade off table at your first take profit, and then you move the rest to break even, and price action takes off and you are in a monstrous long trade to the downside? Let's say over here, for example. Let's say that you got in right here. This technically wouldn't have been a valid entry. You could have gotten in over here, but let's just say that you did, and let's say that you were riding this down, riding this down, riding this down. My recommendation would be to close once price action comes back up and closes in the opposite direction of the center line of the Keltner channel. So you can see that this also incorporates a all-in-one type system where a stop is also built into the indicators that we are using. Let's go ahead and keep playing it forward here a little bit. We now are in a short trade. We would have been in right here on this particular candle right here. We would have broke and closed below the lower band of the Keltner channel, and we would have had the Bollinger Band width above the designated line. We then come down. Looks like we probably would have actually in this case still been in this trade as price action made its way downward. Now let's see. In this particular case, we would have stopped out right here on this candle and would have been basically break even. So let's go ahead and play it out. Just a couple more signals here, a couple more trades, and we will call it good before this video gets too long. We get a break above the upper band of the Keltner channel right here. The Bollinger Band width is in the proper position. Let's go ahead and play it forward, see what it does. Chops along sideways for a little while, and then it eventually gets us to our take profit over here. Let's see, where would we have been actually? Let's check this. There. Yeah, so this green candle right here would have been the one that hit take profit, and so we would not have taken any of these as breaks above to the upside. So there's one more winning trade. Let's keep playing it out and see if we can get ourselves one more here. We get a break to the upside right there. that one. Let's play it out a little bit more here. And I don't know if we would have gotten to take profit on that one. Let's look. Ooh, it was close. But we did not. So we would have gotten stopped out on that one as well. Now again, if you would have chosen to take your stop at the lower band of the Keltner channel right here, you would have gotten to first take profit over here on this candle here. So you would not have taken a single losing trade in this entire period of time following this strategy and modifying the stops a little bit. But again, that comes with a little extra added risk. So weigh your options. It is totally up to you how you do it. So there you have it. That is a pretty decent little setup. You see here how using the Keltner channel, surely if we would have been using a moving average as a baseline to enter and exit the market, we would have gotten pinballed in and out quite significantly right here at areas like this or like this or like this. And so again, you can see how having a channel to trade is giving us a little bit of breathing room to keep us from getting pinballed in and out of positions. So yeah, there you go. I hope you enjoyed the video. Hope you enjoy this strategy. Hope it helps you take the next step to profitability. So we will end the video now and get back to testing in the next video. If you have not already, like this video, share this video, comment below, and subscribe to the channel. Also turn on the bell notification so that way you are notified anytime I post a new video. So that way you know what indicators we have tested and are testing. Also, there is a link down below to join our Discord server, which is a free group communication platform where we discuss all things trading related. There is also a link down below to TradingView, and if you use that link to TradingView to sign up for an account, you will save a little bit of money. And lastly, there is a link down below to sign up for Patreon. Please sign up for the Patreon and support the channel the best way you can.